All right, it's 9 o'clock. I think we'll give folks a few more seconds to log in, but I want to ask for those of you who are already on, if you can see a screen that says principles of budgeting. If maybe you can give me like a thumbs up or something to confirm that that's true. Perfect. Thank you so much. Thank you. Excellent. Excellent. Thank you. Thank you so much. Okay. I'm really surprised to see a number of you so early in the morning. I think more of you are morning people. I certainly am not, so I'll try to keep the energy up, but appreciate you guys taking the time. Okay, so I think we have a full list right now, so we'll go ahead and start. My name is Oliver Avella, and today I'll be presenting on the principles of budgeting. We're going to go over the budget cycle, some policies and processes around the budget, financial reports and forms, and some contact information. And we'll reserve some time at the end to answer any questions that you may have. But feel free to interrupt anytime should you have any questions that come to mind in the moment. And just to try to keep things interactive, I've included 3 opportunities for me to ask you guys questions about stuff that we've covered over this hour. So let's begin. All right, so the budget cycle. So what's currently on the screen is a representation of the CSU budget cycle from the CSU system perspective. Starting in July, the CSU system begins its planning, and the CSU trustees submit their budget request to the state beginning in September. This is actually a change from what had been the practice in recent years. There was a move to make the budget request earlier in the year from November to September to allow for greater time for folks to do more intense advocacy up at the state to promote CSU priorities. In January, the green portion, the governor submits the administration's initial proposal for a budget for the following fiscal year, and in the spring, the sort of state budget process commences. There's a series of legislative budget hearings, and in which the legislature has an opportunity to review the governor's proposal and submit their own proposal for the budget for the coming year. And in May, after receiving input from the legislature and more importantly, receiving information on tax receipts to have a better sense of the state's revenue collections, the governor submits a May revised budget, and there's a final opportunity for the administration and for the legislature to resolve any differences that they may have on allocations and policy priorities. And they are constitutionally required to submit a balanced budget by June, or face financial penalties. I think if for every day that a budget isn't enacted, members of the legislature get their pay docked. This is overlaid by the section in red, which kind of represents the portion of the budget cycle that's related to campus activity. As you can see, what this really kind of shows is there is this overall budget cycle, and it proceeds under its own kind of schedule, its own cadence, and it often doesn't align very cleanly with campus operations. As you can see, we begin planning for the following year, kind of into fall winter part of the year, but a final budget isn't available until closer to December. So that presents some logistical challenges for campuses. This this represents kind of more the perspective of the budget cycle from Cal State Fullerton's perspective. In July, the new year is set up, and in August and September, we consolidate budget asks from the divisions that is then presented to the president and cabinet, who then approves the new year budget. And that new year budget is enacted in a series of technical letters that is transmitted to divisions to show any changes to their operating budget. In the fall too, in November, you'll see that we do our the VP CFO provides a address to the academic senate on the fiscal state of the university. And in January, coinciding with the governor's January budget proposal, that sort of kicks off our own planning for the coming fiscal year. We also, as you can see here, do begin quarterly reviews of the budget to ensure that that the financial plan that was enacted in the beginning of the year is being followed, and monitoring progress of that plan. And we do another kind of check-in on progress to plan in the third quarter in March. And it's also kind of around this time when our office reviews budgets for our auxiliary enterprise parts of the university. So think housing, think parking, et cetera. And in May, the VP CFO also addresses academic senate once again to give another presentation on the fiscal state of the university heading into the new year. And in June, that concludes our fiscal year. I think I know that many of you, I recall seeing in yesterday's training on fiscal year end. So keep in mind the different processes that we're working on as we head into year end. So policies and processes. So this slide kind of takes the budget and the budget cycle and splits them into two different categories of activities. We have fiscal activities that represent the enacting of the financial plan that was created at the beginning of the fiscal year. There's regular quarterly reviews on progress to plan. We look at the budget, see if we're in budget, and resolve any variances. And that is contrasted with and this is the fiscal year. The green part of the display is meant to kind of talk about the activities that are related to the current fiscal year. The blue part, the planning part, is where the university looks ahead to the coming fiscal year. It's at that time when the university reviews the budget ask, reviews, supplements the base ongoing budget to divisions, and respond to the initial proposal by the governor in January, as well as review budgets for divisions and for auxiliaries and self-support organizations in the spring. Fiscal year is kind of a concept of how the university is judged. We're judged by our progress between the months of July and June, and that describes the fiscal year. In the beginning of the fiscal year, we set up the new budget. Base budget is rolled over along with any surpluses from the previous fiscal year and the setup of previous year encumbrances. It's also in the beginning of the fiscal year that there is that process by which new budget adjustments, either incremental or decremental, are given to divisions, and any adjustments made to the campus's overall budget through the CSU's process is allocated at that time as well. Year end is kind of like the season that we're in now. Now we're tracking the progress towards plan. Budget managers are reviewing balances and resolving any deficits before year end, and we're conducting mid and third quarter budget reviews to ensure, again, progress towards plan. So this slide is a way of understanding the reporting structure used by university. The top of that pyramid represents the state of California's fund system. The majority of the funds that we work with are within State Fund 948. And that represents university trust. Previously, I don't recall exactly when, but the university, as an agency of the state, operated kind of on a claim basis. So if the university needed to purchase a pencil, they would have to coordinate with the state and file a claim in order to purchase a pencil. And then within the past, I want to say like I say 10 years, the university was given the ability to retain control of local resources, specifically student fees, instead of taking the student fees and remitting them back up to the state and then requesting use of those fees in order to purchase a pencil or purchase beakers or what have you. The university was able to retain control of its own student fees in State Fund 948, and that middle tier represents the reporting structure that the system uses to discretely apportion the different funds it has, and to also describe the rules and regulations surrounding each of these funds. The lowest tier of that pyramid represents local campus funds. So the middle tier is a way of understanding the different funds that are available to campuses on kind of apples to apples comparison, so that we can talk about 485 or operating funds for Cal State Fullerton in the same way that we can talk about 485 operating funds for Cal State Long Beach. Here, Cal State Fullerton 485 is represented by a number of different local campus funds, including the main operating fund, THEFD, the Student Success Fee Fund, SSFGF, and lottery, which I think is of course part of CSU Fund 481. Budget oversight. So a lot of what our office and indeed actually financial managers throughout the university do is to review the budget and to ensure that we are making progress towards plan. I see a question in the chat here. Where do student paid tuitions fit into that pyramid from Brian? Let's go back to that. So student fees are part of operating funds. student fees uh, are in 485 and represent the resources that the university uh, uh, has access to to do its business. It's a combination of student fees and general fund state support. Um, they all sort of fit into 485 operating fund. Does that answer your question, Brian? Okay, thank you. All right. Um, So budget oversight. So the budget oversight policy is fairly straightforward. The system expects us to look at the budget and to look at the budget regularly and making sure that we're making good progress towards the financial plan that we set out for ourselves. The budget oversight policy asks us to look at the budget at least once per quarter to compare revenues and expenditures according to plan and to do some variance analysis. If we said we're going to collect a certain amount of revenue and we our collections are under that plan, what's the university's plan to address that, or the opposite? If collections exceed plan, like um, what are the plans for that surplus should they arise? And the same thing with expenditures. If expenditures exceed plan, is there a plan to reduce expenditures elsewhere to ensure that we're within the plan? And if there are savings in parts of the budget, is this an opportunity to deploy those resources elsewhere and in the university where it might be needed? The quarterly reviews are apportioned between our office and with unit managers. The first quarter review is done by our office, and in the mid-year and the third quarter review requires input from different units to understand from their perspective and uh, what the where they foresee how they're going to end the year. And the link below is kind of the policy citation if you wanted to go take a closer look at the policy that's related to budget oversight. Cost allocation is also this idea that the operating fund is uh, um, meant to support the main instructional mission of the university to the extent that the operating fund supports other parts of the university that are related to the instructional mission but are not directly related to the instructional mission. The operating fund needs to recover those costs. Think of the kind of administrative overhead that's provided to other parts of the university, like housing and parking, in order to ensure that the operating fund is made whole for those costs that are incurred for other parts of the university that are meant to be self-support. There's a process by which there's a cost allocation and reimbursement. Direct costs that can be attributable to those specific funds are recovered based on the actual cost incurred. It costs us this much to do this for this on a very specific fee schedule. Then that cost is passed on to those areas. Indirect cost is a method to allocate those costs which aren't readily identifiable or attributable to different parts of the university. And the indirect cost is as the name suggests, calculated indirectly through things like transaction volume, uh, you know, square footage, etc. The cost allocation plan is approved by the chief financial officer. And if you want a more thorough description of the direct and indirect cost allocation process, there's a training provided through the through financial services on May 7th. And again, just like in the previous slide, there is a policy citation below if you want to see the policy that the full text of the policy related to cost allocation. So I think an important concept to understand to understand as part of the university budgeting process is the difference between base and one-time. Uh, uh, Base is those resources that are permanent and recurring. Recall that we're kind of I want to say graded or judged on our performance by fiscal year. The base budget is the financial plan that travels from fiscal year to fiscal year. The base budget for this year is the basis for the base budget for the following year, subject to any changes to the base budget that are made in this fiscal year. The base budget is supported by state operating funds, kind of like what Brian was asking about earlier. These include student tuition and general fund state general fund support. Base budget is set up in July, and adjustments can be made throughout the year based on allocations that we get from the chancellor's office, and then are allocated down to the individual units from the campus out to the units. So base budget is the part of the budget that travels from year to year. One-time budgets are adjustments that are in the current year only. So a good example of something that's within the current year would be carry forward budgets or budget savings from the previous year. They are resources that are available in the current year and do not necessarily travel year to year. Another example of that would be the encumbrance roll forward and any variances within the revenue budget. So, hopefully, like everybody else has, everybody has gotten their coffee. So I'm going to ask a question here. At what month does the CSU Board of Trustees submit their budget request to the state? Anyone? Oh, I heard September, I heard May, pretty close. Yes, it is September. Yes. This it used to be a lot later, but as folks, it has been moved up to September to allow time for folks to advocate for all the good things that the university is doing on behalf of the state of California. So thank you so much. Yay. All right. So position controls. We'll go into a little bit about the importance of position controls later in the presentation, but position controls basically are a way for the university to control one of the largest categories of expenses that it has that would be cost related to personnel. Budget managers are responsible for requesting HR inactivate positions that are no longer needed or have sufficient funding for recruitment. Well, we'll talk a little bit later about how one would determine how one would analyze one's budget to understand how much is available for positions. And another kind of concept that dovetails to what we were talking about earlier, permanent positions should be funded from base ongoing sources. Permanent positions represent a cost that is also base and recurring. And the principle here is we try to line up base uses with base sources. Um, and it's sort of the same idea. We would line up one-time sources for any one-time uses. If so, for example, if uh, travel could potentially be supported on a one-time basis from one-time sources like savings from the previous year. And this is also to say that there's a thorough description of position budgeting provided by financial services, April 15th. Labor cost distribution. Kind of related to position costs. Labor cost distribution is a function that is carried out jointly between our office and HR, and it's a monthly process to assign personnel costs and assign those personnel costs chart field values so that they can be reflected in financial reports that are on our campus OBIE. Once a month, we get data from the state controller's office, and that data is then converted into the financial information that budget managers can review to ensure that they're making progress towards plan. And while the process of LCD is largely automated, there can sometimes be errors or mismatches when there's the funding setup isn't in place for a position. If there's any questions about that, please feel free to contact us at budget@fullerton.edu. We'd be happy to research for you where a position's costs are being assigned as part of the LCD monthly process. So this is just related to LCD. The chart field values that are used to describe, revenues and expenses, primarily from a budget perspective, revenues and expenses related to university activities. So an account is a description of what type of activity it is, if it's what type of expense it is, or what type of revenue it is. So for example, 606001 is a code used to describe in-state travel. Fund is a code that describes the funding source. So if this travel is supported by the main operating fund, it would be described using the fund code THEFD. Department describes who incurred the expense or who collected the revenue. And could also be thought of as a cost or cost center or profit center or revenue center. So for example, if we wanted to say the budget office is the cost center that incurred the in-state travel, we would use the department fund code 10037. Program and class are reporting values, where program tends to be reserved for reporting on activities that transcend fiscal year to fiscal year. So one of the larger programs in the university, GI 2025, is tracked using program code. Class is another way to kind of track or segregate different types of revenues and expenditures, and is often reserved for activity that is within the current fiscal year. And these are just kind of soft designations. Programming class tend to be just things that people can add to chart fields to assist them with tracking and reporting. Project is a very specific chart field and is used to track expenses related to non-recurring maintenance and repair projects or with capital projects. So activities related to the building or the maintenance of building and infrastructure on campus. Scenario is a chart field that is unique to the budget office and is a way to tag different budget transactions to be able to identify whether a budget transaction is base or one-time and categories of different base and one-time adjustments. So if a unit wanted to make an adjustment to their budget within the current year, we would use the scenario BTR one time as an example. And for a more comprehensive training on the chart of accounts, Financial Services is offering that training March 20th. If you need to request PeopleSoft chart fields, for example, a program or class to track activities, track financial activities, you can send a request to ASFR through their e-submission process, and the link is kind of shown below. So moving on to financial reports and forms. Our financial reports are hosted on OBIE. It's I think some point in the near future they'll I think IT is planning on transitioning the tool to AWS QuickSight, but financial reports are not yet available. So they're still hosted on OBIEE. You can find a link to OBIEE through your campus portal, and that sort of link is displayed in the screen. One of the more common reports that folks use is the revenue and expense summary. So revenue expense summary is a way of tracking performance to plan. It is a way to see what the balance available is, or another way of thinking about it is doing variance analysis. In order to arrive at the balance available, you start by your revised budget. The revised budget is the total budget that you have in the current year, which includes the base recurring budget and any additional one-time adjustments to that budget. Against that budget, or subtracting from that budget, are in total current year actuals, encumbrances, which represent a contractual commitment to or contractual obligation against those resources that have not yet been paid out. So an encumbrance for $100 will eventually become once that encumbrance is satisfied, becomes an actual expense. Both actuals and encumbrances reduce your balance available. Also on this campus, we include pre-encumbrances or requisitions that are in progress to reduce your budget balance available. The revenue expense summary does exactly that. You would read it sort of from left to right. So beginning with your revised budget or your total resources available, you would subtract from that current year actuals and any encumbrances and pre-encumbrances to arrive at the budget available. And then that forms the basis of kind of your variance analysis. Depending on your needs, you can use these different selectors to isolate different funds, different accounts or different types of expenses or revenues that you're interested in. And if you are tracking financial information by program or class, you can also select that as well. And if you need to do some research to understand what are the different transactions that comprise that revised budget, for example, or that comprise that encumbrance that's reported, you can find that information either by clicking into the number in blue directly, or you can also use these detailed reports that are also available. So just another quiz break. Which chart field describes who who incurred the expense or who collected the revenue of the chart fields that we discussed? Yes, that's right. It is department. Thank you. Thank you. Hooray. Okay. So um this is a slide that I include kind of ahead of the next set of reports that we're going to be talking about, the budget management report. And what this represents how much of the university's operating budget is related to personnel costs. In this case, it's between 70 to 80%. Um, um, which goes to the point that in order to um, understand the university's cost structure and to to have better budget budget management oversight, it's really important to understand personnel costs. What the budget management dashboard tries to do is it's very similar in layout to the revenue expense report, but it also includes salary projections. So the I think the the I'll go back to this to the balance available calculation doesn't kind of have that piece. Like in order to understand or to better predict the fund balance at the end of the year, the budget management dashboard reports add a projection of salaries from HR data in order to estimate budget balances by June. The budget management dashboard compares base budget against the recurring salary costs for regular positions, and but also can be modified to show total available resources. So not just recurring resources, but one-time resources against that recurring cost. So these are some, but not all of the different reports that are available in the budget management dashboard. I just wanted to highlight a few of them that I think can be most useful for folks. So the first one is this baseline position budget, and what that is just your baseline salary budget, lining that up with the projected salary costs associated with that budget, and also includes something we're calling to be hired position information. Think of them as sort of like an encumbrance. Um, it's a way of saying, we are in the middle of recruiting this position. We expect this position to cost the department X amount of dollars. We want to sort of reserve that budget for this position that is currently being recruited to arrive at a truer and projected end of year balance. So that's the baseline position budget. The baseline position budget only looks at those employees that are considered regular or have permanent appointments. baseline budget all employees is the same report, but also includes those employees with temporary appointments. Employee salary projection. How is the information? So Crystal asks, how is the information for this report fed? Well, it's updated once a month when at month end, and is information pulling from the HR system. It looks at the positions, funding setup, kind of the funding setup that we talked about in LCD, and then looks at the position's monthly salary amount and projects that monthly salary amount by the remaining number of months. So if if this position is meant to cost a certain amount per month, it's multiplied by 12, and that's the projected salary, and it's lined up to the different chart fields related to that position. Does that answer your question, or are you looking more for like how often it's updated, or?
That's perfect, Oliver.
Oh, okay. Okay, awesome. Thank you. Okay. The last report, and again, there are additional reports that are available on the budget management dashboard, but I think that this last report is also useful for folks. It's the employee salary projection, and it's takes the salary projection and kind of drills it down by the individual employee. It'll have to date actual pay posted, and then a projected salary for future periods. So the employee salary projection should have amounts projected for March, April, May, June. For additional resources on the reports we talked about, I would recommend that folks, pardon me, use the PeopleSoft knowledge base that was sort of created a long time ago by IT. It's very comprehensive. But if there's any questions on specific reports, especially like the budget management reports, our office is more than happy to answer any specific questions that you may have, or if you find any discrepancies and would like that addressed, well, we can certainly research that for you as well. Okay, so moving to kind of away from the reports, but some of the forms that we can use to adjust our records, or adjust the financial plan. One of them would be the budget transfer requests. A budget transfer request allows units to submit a request to transfer budget on a one-time or ongoing or basis. If you're submitting a budget transfer request, they will need to be within a single fund code. So we wouldn't necessarily accept the request to transfer budget from THEFD, the main operating fund, to the student success fee, for example. And the reason for that is these fund codes represent not just different buckets of money, but different sort of purposes and rules and tracking and reporting related to individual fund sources. So it's critical to kind of ensure that that separation is maintained, and that we understand how well, just that these separations are maintained. This third bullet point really only applies to THEFD, the main operating budget. When converting OE and E budget to salary budget, our office will ask that you provide a benefit contribution. I believe in July, our office sends a notice to division budget managers to let them know what the current year rate is for benefit contributions on these conversions of O&E budget, and that would be something you would look at when we receive a request to transfer budget between OE&E lines and salary. And we also ask that if there's a transaction that may appear unusual, that you provide any supplementary information. I think we take a look at these, and we will reach out to folks if there are any questions. Oh, okay. Sure. Can you provide an example of a budget transfer request? Like, what would we use this for? Okay. So Alyssa asks what we would use like a budget transfer for. So one example, I think one of the more common examples that we receive is there are intra intra-campus reimbursements. One department is just paying for something by agreement for another department. I think one way that is commonly achieved is through a budget transfer request. Like, we are going to transfer some of our excess budget in this department, and we'll transfer that budget to the to another department, in exchange for some sort of service that they're providing on our behalf. Another example would be, to correct the budget. If the budget is the sort of financial plan for units and for the university. If the plan is changed, if a manager is electing to redirect resources that are under their discretion towards some other purpose, I mean, that could be achieved through budget transfer requests. I mean, there's a lot of different things that would cause a budget transfer request, but those are probably one of the more common ones that I see. And the budget transfer request is available on the budget website, and there'll be a link to the budget website later. Position action form. So position action form, I'll say first, is not something that's like directly managed by our department, by the budget office, but really is something that we work with pretty often, as we just kind of mentioned earlier. The majority of university expenses, 70–80% of university expenses, are related to positions. So there's a lot of tracking and reporting around positions, and making sure that position is being recorded against the set of chart fields that it's supposed to be recorded against. If a position is meant to be charged to, from the main operating fund, THEFD, to say student success fee, you can enact that change by submitting a position action form. The position action form does a lot of other things too, but as far as as far as this conversation goes, like really that's the main thing we want to focus on for position action forms. It's available on HRDI's website or directly in the AEM portal, and just kind of a picture of where the AEM portal, which is also available on the Employee Hope page. Payroll expenditure transfers is meant to be a correction of previously posted payroll. Um, we would ask that if the unit or department has knowledge of where a position's costs are supposed to be charged, they use a position action form to direct those costs to those set of chart fields ahead of time. I know that there are cases when that's not possible. Uh, like for example, I think there are positions like student assistants that are assigned a single position number, but certain students within that student assistant pool are assigned to this set of chart fields, and another set of students are assigned to a different set of chart fields. So that becomes a little tricky and not necessarily something that can be addressed by a position action form. But to the extent that one is able to use a position action form, we would encourage folks to use that. It just makes the reporting cleaner and takes away from reduces the lag between when uh, lag between uh, uh, when a position's costs post and when it's accurately reflected in financial reports. So one of the critical things in understanding payroll expenditure transfers is the difference between charge period and accounting period. Uh, uh, Charge period represents the time in which the effort or time in which the effort was made or when the payroll charge was attributed to, versus when the pay is posted, uh, which goes to kind of describe situations like uh, back pay. Back pay could be paid in, say, the most recently closed month, the month of February, but it's attributable to something that happened back in July. So the charge period would reflect the fact that the pay for this employee is related to activity back in July, but it posted or was recorded in our financial ledgers in in February. Kind of another feature of payroll expenditure transfers. It's uh, each of the lines that are in a payroll expenditure transfer represents an individual paycheck, and which is a little bit different than when we talk about uh, ex, ex, other types of expenditure transfers. The 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 way it's entered into the system is you know is a lot more complicated than simply adjusting a line in the ledger. That specific paycheck must be kind of manipulated in order to make the change that folks are trying to do with the payroll expenditure transfer. Um, one of the another one of the differences also uh, with one of the changes that we made in the payroll expenditure transfer form is that um, these individual paychecks must be fully distributed, meaning if the paycheck line is $100, and you want to direct a portion of that line to, say, student success fee, you have to explicitly say where the other portion of that paycheck is directed to. So in a example of $100 paycheck, you could say like $50 of that went to student success fee, and in a following line, you would have to um, say explicitly, like say out loud that the remaining amount needs to stay in the operating fund THEFD, and that I think is something that is frequently a question that we receive. And lastly, like with any kind of expenditure transfer, please ensure that the payroll expenditure is appropriate for the funding source. If it's an expense related to if you're trying to do an expenditure transfer to student success fee, make sure that it's consistent with the principles of the student success fee and why that fee was enacted in the first place. Um, the payroll expenditure transfer form is available on the budget website. And last quiz break. Um, approximately how much the university's expenses is related to personnel costs. Yes, absolutely. Yeah, it's a 80% lot. You guys all got it. 80%, 70 to 80%. So we're nearing the end of our presentation. I just wanted to point out the budget website. Um, that's it. That's where you can get links to the budget transfer request form or the payroll expenditure transfer form, as well as some helpful reports. If you want to have an understanding of the university's total operating budget by different expense category, that report is available. If you want to see some of our quarterly reports of uh, expenditures against plan by division by individual departments. You can find those reports here as well, and has contact information if you want to contact us and have and ask specific questions about your budget. So kind of with that, that I just want to open it up for any additional questions. I think it took a little bit more time than I intended, but does anybody have any questions? Oh no, you guys are welcome. No problem. Awesome. Well, I've been asked to provide, a link to the training survey to you. So I encourage you guys to take the survey, provide any feedback that you think will help. I think I have a very thick skin. If there's anything that we can do to make this information more relevant to you, more useful to you and to your job, we're happy to consider all of that. And at the end of the survey, there's it's going to ask you a question. Um, and if you say a percentage less than 25%, I'm going to know. And I think that might make things awkward if I see you in the elevator. So please, please consider being generous. Thank you. All right. I'm going to conclude this presentation. All right. Thank you so much, and I'll see you guys later. Bye.